Hey guys, it's been a while since I recorded a YouTube video, so I wanted to hop on here and discuss where the markets are at currently with you guys. The first thing I want to talk about is quantitative easing versus quantitative tightening. On June 18th, I posted a brief little chart on how this works. So I don't want to go over how this works necessarily. I mainly just want to go over the numbers. If you guys want to know exactly what it is, you guys can check out my Twitter or do a quick Google search and you'll find many articles explaining it more in depth. But I do want to go over the numbers with you guys. The Fed began quantitative easing on March 15th, 2020. And what happened as soon as they started easing, the market just kind of took on this bull run and took right off. And on June 1st, they announced that they were going to begin quantitative tightening, which is the complete opposite. And so we should be expecting the opposite to happen to the market, basically go from a big bull run into a bear market, which you guys have seen taking its course currently. I want to go over the numbers with you guys just so you guys get an idea of where we are at now versus where we could end up being. And this article that I found on Bloomberg touches all of that for you. You can do a quick Google search to just type in quantitative tightening and Bloomberg, and I'm sure this article will pop up. Basically, on June 1st, the Feds had a $9 trillion balance sheet. And when they announced quantitative tightening, which started on June 1st, they announced that they would be draining the market $5.3 trillion, which is more than half of the Fed balance sheet. You can go into detail and read how that they are going to do this, but the main takeaway that I want you guys to keep in the front of your mind is that they are going to drain the market more than half of what it is worth, or what it was worth on June 1st. It's been nearly a whole month since they began, and you're going to see that on the charts when it started and exactly what type of effect that took place afterwards. So I'm not going to go into any charts today, just Bitcoin, just to give an example, but you can check other charts too. They show the declines kind of all trickling down at the same time. So let's take a look at Bitcoin. The last time I was on here, I believe I was going over wicks and capitulation. And we were right about here. We got our capitulation candle, and I discussed that it would probably touch this trend line, which it did. It dropped to the trend line and it wicked below. And as we know, with every wick, it always gets filled. And what ended up happening after the capitulation candle, we consolidated, we went sideways. We actually built a little falling wedge, broke out of it, and then the CPI data came through and Bitcoin just tumbled after they realized that they would be draining the Fed balance sheet too. So we ended up filling that wick and going lower, as I stated in my videos. Now, what I didn't expect was Bitcoin to tumble to nearly 17,000 that quickly. But at least now we know that they are not messing around and they are definitely going to be draining the markets. I believe that was June 1st. So let's take a look at where June 1st was right here. So we got that announcement and Bitcoin sank down, and then it kind of went sideways. We get CPI high inflation data and Bitcoin just sinks. So this is our capitulation candle that I posted on Twitter. Let me zoom in for you guys. And you could see the volume bar was more than twice the size of the previous. That would be our capitulation. After every capitulation candle, we know that we consolidate for at least a week, which we have been here consolidating for at least a week. So far, Bitcoin has printed an inverse head and shoulder pattern, and many people don't think that this is a legitimate pattern, which is true. More than half the time this pattern does not play out. You can even see here that we kind of have this inverse head and shoulder pattern after Bitcoin fell off. But the difference between this inverse head and shoulder pattern and this inverse head and shoulder pattern is the volume. And this one is a much more true inverse head and shoulder. And I'm going to go over why that is with you, and we can usually tell by the volume. So let's make this a little wider because I'm not sure what this looks like on your screen, but you could see this left shoulder had the highest selling volume. Excuse me. Had the highest selling volume, and the head had a less selling volume. Over here, the head had the most selling volume, and the left shoulder actually fell a little bit short. A true inverse head and shoulder pattern will always have the highest volume falling off on the left shoulder, showing that the selling volume will decline from there. And in this case, the selling volume has been declining. See, the head didn't get as much selling volume as the left shoulder, making the probability of this pattern actually breaking out a little bit higher. However, we are in a bear market, so I don't expect Bitcoin to start pumping or anything because most of retail is out of the market and everyone knows the Fed is tightening and drying up the markets. So even if this does break out, which it did kind of break out, and it's back testing right now, but even if this does kind of continue up, it's going to go up on much less volume that we've seen in the past couple years. So it's just going to kind of go sideways, kind of like we did here, build out more patterns. I think that we have a good chance of back testing that trend line, that main trend line from the beginning of the bull run. But if we don't, I have the CPI marked on my chart. I usually mark big dates like this just so I could see how much time in this consolidation range that we might be spending. I don't mind if Bitcoin goes down really, really low. The lower it goes, the better it is for me because I do plan to invest heavily into Bitcoin. But we just began quantitative tightening this month. So I do expect Bitcoin to drop much lower than it is now. I don't believe that it would follow the past cycles without breaking its previous high from the previous cycle, just because we never had a situation in the economy like we do now with the high inflation plus quantitative tightening. That's never happened before. And you can see as soon as the inflation data came in, and when they announced the quantitative tightening, the markets started falling off, and we haven't even came close to drying the markets yet. So you can just imagine how much lower this is going to go. Now, what I do know is the quantitative tightening schedule is said to end in the first quarter of 2023. And previous to even knowing that information, I've posted this before, the business cycle low, the bottom of the business cycle low is expected to be or projected to be on the timeline in the first quarter of 2023. So we know the Fed will probably stop the tightening in the same quarter. So we can look forward to 2023 first quarter being the market bottom. Now, if inflation doesn't come down with all of this increase of interest rates and all these new policies that the Fed is feeding into it, then we can expect them to probably continue tightening. But by then, nobody really knows, and I do expect the market to bottom sometime in the first quarter of 2023. If anything changes between now and then, of course, I will update, but right now, that is where I see the bottom of the market. I don't know how low this is going to go, but with each dump, we'll have a better and better and better idea. So the main takeaways is that if you are swinging longs in this market, you should definitely sleep with one eye open, because you may wake up to your position being completely annihilated at any time. Being in a short position is probably the safest position in this market. I don't love to swing longs. I usually just day trade longs in this environment. Being in a short position is much, much more safe, because you should be expecting the market to continue tumbling with this information. I know a lot of people think that we could go up, but we can see these short squeezes kind of throughout the weeks. But at the end of the day, quantitative tightening just began, and you should be expecting the market to go lower. I just want to keep repeating that in your guys' minds. You guys should expect the market to continue going lower. Definitely take profits as you see them, and I will keep updating with little facts on my Twitter and continue making videos as I can. But that is all the time that I have for today, and I don't want to make these videos too long and too boring, so I'm just gonna end it here. Thank you so much for subscribing, to anyone who did, and liking and continuing your guys' support. I really appreciate that. Have a good night.